What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 50. This is the February 2021 edition. And this morning we're sitting down with TCC President Robb Roach, VP of Sales Petrarca, and Latin American Operations Manager Javier Fernandez. Good morning, everybody.
Good morning, Ben.
Morning, Ben. Congrats on 50. Wow.
Happy half century.
Yeah. Halfway to 100.
To celebrate.
Been a lot of content and 50 podcasts. Hopefully our Kettlebottom creative friends can do a little, rerun of some of the highlights of the last 50 podcasts. That would be really cool.
More like a blooper reel of us.
I think starting to record these, whether it's a go-to meeting or, when you do them in person, having the video there too is adds to the blooper reel, which is nice.
There's been some good bloopers.
Yeah, we'll put that together. We'll put that in this episode, or maybe do a separate first 50 blooper reel. There's some good stuff in there. I don't know what stands out. I think for me, it's Robb slapping Nick in the face when we had the interview with the fly in his face.
Yeah, I was trying to kill a fly. I didn't slap my father. I was trying to help him get that fly that kept landing on his forehead, and I killed it. Remember, I killed it? I think I killed it.
Oh, yeah.
It was like a ninja slap, Got that sucker. When the door fell down behind Corey, that was hilarious. We've had some really funny moments, man, where we've all been like belly laughing, out of control. So yeah, there's some moments out there for sure. I mean, it's not all boring chemical talk.
Yeah, it's been a lot of fun. I think it'll be interesting to go back and read or re-listen to some of those early ones. I mean, the fact that we can go back and listen to what we were talking about February 2018, February 2019, it's interesting historical data on what was going on then, if we were right or wrong about stuff. It's interesting now to have that database and be able to go back and listen to them again. But yeah, so this is episode 50. This is February. Seems like there's a lot going on. We're right almost smack in the middle of the first quarter here for the year. It's been I think hectic start to the year, busy start to the year, but all good stuff, it seems like, overall.
Well, that pretty much sums it up. I mean, it's hectic. it's interesting. As far as TCC goes, it's not our first quarter. February starts our third quarter. First half of the year was okay. Really starting to pick up now in January and in February. Starting to see some real demand improvement, but along with demand improvement comes a lot of bottlenecks, especially when you factor in the pandemic, logistical problems, supply problems, plant outages, and now extreme raw material increases. So I think that's about what we're looking at right now here in the beginning of February. And there's no relief in sight. We're also seeing mid-February, you're going to have the Chinese New Year. That means no product will move out of China for most of the month of February. Further, making things difficult in terms of supply chain for products that do come out of China. You still have a 25% tariff on anything coming in from China. And just the last couple of weeks, we've seen a resurgence of coronavirus in certain areas of China, and that has really crippled them because, as we know, when China has a coronavirus outbreak, everything stops. So as far as the U.S. goes, we're seeing some relief in terms of the spread. The deaths have surged, but that usually comes a couple weeks after. We see a peak in coronavirus new cases, but it looks like the protocols that have been put in place in terms of wearing masks and whatnot are working, and people are being more conscious of that maybe, and the vaccinations are having some effect. So we're really optimistic, looking forward that things will improve, but that also means there will be improved demand. And as you know, with a V-shaped recovery that we've seen from a really horrendous financial picture, we're going to have at least a year or two of supply chain disruption. So, we've been faring well with our suppliers, doing the best we can to keep everybody covered on volumes. The logistics company has done great work for us on finding trucks. AJ mentioned that another customer of theirs had mentioned to him that they were the only logistics company that wasn't, quote unquote, screwing them because it is so tight out there. So, but they've got the power of volume, and they've been doing a good job for us. So, I mean, we're hanging in there, Ben.
Yeah, and I think to dive deeper into a couple of those things, I think the biggest reason for a lot of this stuff being pretty hectic is it seems like there's been a pretty steady and significant pickup in demand overall, pretty much I think across all the industries that we're selling. I know AJ and Javier, the three of us talk frequently and are always talking about things being busy, whether it's things coming in through the website, new inquiries, existing customers coming back, people looking for samples. I'm sure you guys can attest to the fact that it seems like demand has been pretty strong here so far this year so far.
Yeah, demand has been bonkers. I mean, coming off of critical low inventories, even a small uptick in demand would cause supply interruptions or a crunch in the supply chain. But we're seeing a big uptick in demand. So it's it's across the board. It's everything. It's in every end use, every application that we sell into is feeling the same crunch right now.
Yeah, it seems like that's been the most interesting thing about everything going on is obviously TCC operates and sells to a bunch of different verticals and types of product lines. And, sometimes this will be busy, but this will be a little bit slower. But it seems like, like you said, across the board, every end use we sell to, every sector that we're in seems like it's busy and people are optimistic.
And prices going up across the board, regardless of raw materials, regardless of anything. You can just expect price increases at this point.
Yeah, I think that's a good segue into obviously, it's all good and great that demand is picking up and high, but obviously if the supply isn't there, that doesn't equal a perfect formula there. So yeah, I know we've seen prices getting much more expensive. Logistics continues to be a challenge. Material availability in general, regardless of what the price is, if you can't get the material, that's been a challenge. Javi, I know you deal a lot with imports, exports, and have a good picture of kind of global availability and material availability. I know it's been an interesting time managing some of these imports.
For sure, definitely interesting times with the imports and exports. Lead times are longer, the validities are shorter for the quotes, so decisions have to be made very fast because otherwise the material will be gone when they decide to wait. So we have a 24 hours, 48 hours validity, and sometimes the suppliers are withdrawing those quotes because the material is already gone. So it's very interesting at the moment.
Yeah, I think everyone on screen here can attest to the logistics challenges that are going on as well. Whether it's ports being extremely backed up, LTL taking days, if not weeks, for pickups and deliveries. The lead time on liquid bulk tank trucks and things like that out, a couple weeks, if not longer. It's been another challenge, even if there is material availability, actually getting it from point A to point B. Rob, I know you have a good picture of kind of everything going on with logistics, whether it's ocean vessels, LTL, bulk freight. It's been very tight. Seems like all those formats.
Yeah, I mean, just looking this morning, at ocean freight from China, to the Midwest, you're looking at $5,500. That's what we got for a quote just this morning. Something that historically might be for a quarter of that. That's 4 times what we might normally see. Alternative to that, or a sort of adjunct to that, is that freight, ISO freight, box container freight from the U.S. outbound, very cheap. People want to keep these containers moving, so we've actually seen export from our tanks and from our inventories in the U.S. To other countries. So that's been pretty interesting to us as well. Europe, there's less lines coming to certain destinations. There's more volume. It's having an impact on any, departures from Europe. Very expensive as well. So yeah, I mean, freight is getting things out of the port is, you're looking at the merge, because you're not going to be able to get it out on time. You're going to look at additional charges. For a company like us, that's horrible, because we take that on the chin. That comes directly out of any profit that we take. Also, we have had a lot of discussions in the last couple of weeks. There needs to be the communication between logistics through customer service to the sales to the customer, because a freight rate that was $2,200 to go from New Jersey to the Midwest is now $3,500. Well, again, if that $1,300 to get it there, to get it to the person, to get it on time, that is the rate today. if we absorb that $1,300, maybe we won't make any profit at all. Maybe we'll make a significant loss. So what some of our competitors are doing are adding on an additional line item, additional freight. I mean, we haven't done it. We've been very open with our customers, talking about the cost of freight. And people, it seems like some of our competitors haven't even grasped the fact that they're paying sometimes 10, 20, even 50% more for freight, whether it's dry bulk or liquid bulk or LTL. You're paying more for freight. And if you're not passing that along to the customer, then you're taking it on the chin. It's coming directly out of the profitability, which in our business is usually very short percentage. So we're not unable to absorb that cost. So it's been it's been a lot of work to get the message out to, we've got, hundreds and hundreds of customers to say, hey, listen, we've got this cost increase. We got to share it. There's things that we have to do. If you want to get the product and get it even close to on time, you got to pay what you got to pay, So it's been a very fluid situation that is ongoing every single day. I mean, we've seen problems with freight, but it just seems to be compounding.
Yeah, you make a good point there too. I think just in terms of being informed, getting information, obviously I know we're trying to pass the information across as best we can. All of our sales managers are talking to customers and talking about what's going on, whether it's product availability, pricing, logistics. But can't stress the importance enough of just understanding what's going on. Obviously, we'd love everyone to be listening to the podcast and getting our emails, but whether that's following along from us, other industry newsletters, talking to logistics folks, just can't stress the importance enough about having the information, understanding what's going on. I know Robb always talked about how important information is and the value of just passing information back and forth so everyone's on the same page. So I think in times like these, you can't stress enough just being tuned into the market, understanding what's going on for the benefit of your businesses and your supply chains.
Well, this podcast is a good thing for our industry. Our industry is small, so this would be a very niche podcast. But the ramifications of what we're seeing today are trickle down to months ahead, even years ahead. The fact that we're talking about today a cost basis of propylene going up. What was it, Javi? I think we're looking at a 40% increase.
46% increase.
46% increase in propylene right now, based on the spot market in the 80s, in the upper 80s at times. Propylene is the flour in the cake of just about everything we sell. If there's eggs, milk, and flour, the flour is propylene, and this is shocking. And this will trickle down into raw materials that go into things that we consume every day. And therefore, we are seeing inflation coming in finished goods. So people need to be aware, not only is it freight, but it's raw materials, which will go into the critical components that we supply to our customer base. Our customer base are all people that we all know out there, or they're all brands that we recognize. So buyer beware, buy now, I guess, and that's what we've been saying the last few months, right? We've been saying buy now. We can pat ourselves on the back because we were right. We saw this coming. Not that we were proud of that, but we're proud of the fact that we're forewarning the last 3 podcasts. Hey, buy now. Set yourself up now because the cost increases are coming. Don't worry about the cost of warehousing this product. That's nil compared to what's come and what is coming. So it's going to be an interesting few months, and there's a lot of factors here that are now coming together that we're going to see some of maybe the highest prices for the chemicals that we sell that we've seen in a decade.
Yeah, I think going back to one thing we touched upon a little bit there, which was the situation with China, which obviously plays a big role in our industry and what's going on. AJ, I know you mentioned, or you manage, obviously one of our largest products that comes out of China and are closely tuned in there. 2 things going on between the Chinese New Year affecting shipments, as well as the tariffs continuing to, A, remain in effect, and B, not have those exemptions that were in there. A bunch of big things happening with China and things that will play a big role, I think, coming into pretty much the first whole half of the year. It seems like these will be some big ramifications with delaying shipments and things like that.
Yeah, and this is also coming off new environmental regulations put in place by the Chinese government. So things were tight to begin with. Plants were closed for periods of time, or some plants closed altogether. So a lot of things in China were tight before, all of this started with the containers and Chinese New Year. So there's a lot of factors at play right now. And I don't know, I was having a conversation yesterday, and the buyer was, asking me, do you think it's going to go right back to normal after the Chinese New Year? I said, absolutely not. It's going to take months, for things to even get back to some sense of normalcy, because it's such a backlog. Just look at the ports of, the West Coast ports right now, Long Beach, LA, are, I don't even know how many ships are out there waiting to offload right now, but that's takes a lot of time. It's gonna take some time to get back to any sense of normalcy.
Yeah, and obviously the Chinese holiday coming up, I think the 11th to the 17th. What was the earliest date we heard this morning for shipments? If you place an order today from China, the best case scenario is to ship March 2nd?
Yep. Beginning of March.
So today's February 5th, so that's a good month from now, and that's best case scenario.
We keep focusing on China. I mean, the fact is that as AJ talked about, the environmental regulations have already stymied a lot of Chinese supply. The tariffs have certainly stymied supply to the U.S. We've fallen back on those countries that have vertical integration into propylene and things like that, and back to oil and U.S., Europe, Middle East. They're sold out. They don't have any more. They just don't. The last 20 years, the world has been positioning for low cost supply from China. So there hasn't been the investment. There hasn't been there. Yes, in recent years with fracking, there's been a tremendous amount of investment in plastics, polypropylene, polyethylene, et cetera, here in the U.S. But there's so much cost into investment into a new world scale plant. The only place that's been going on really is in China, and in some respect in the Middle East. We've seen nothing but rationalization. The global population is rising, demand is rising. People are we're chasing the wrong thing the last 20 years, because China reversed everything, and in their fifth plenum they said, you know what, we're not going to be the low cost provider of everything. We're not going to pollute our country. We're not going to be a completely polluted low cost provider of things for the future anymore. We're going to be more technological. We're going to be more environmentally conscious. This is flowing not only from countries, but it's flowing through corporations and the world, really. There's a consciousness about that. So it's harder and harder to build world scale plants. As demand increases, there's not more of that. There's actually less of that. Rationalization is a key factor here. So where we've seen very low inventories, another point that AJ made, super low inventories. Accounting, finance has always said, keep your inventories low. Only buy when you need to. Oh my God, what a disaster that's now becoming. I mean, you've lost completely by not having those inventories. Everything that you thought you'd gain, you've now lost. So, all these corporate strategies have to be analyzed, and, things are always tenuous. We've seen fires in plants. We've seen fires at, at gasoline and oil refineries. We've seen outages. We've seen major outages. We've seen lightning strikes. We've seen weather that's made for outages. I mean, this is compounding here, and it sounds alarmist, but if you're in this industry, I'm not telling you anything you don't know.
Yeah, I think all that kind of a good segue too to one of the other major areas that we cover is Latin America. Mexico and the rest of Latin America, both imports and exports. Obviously, selling some, to Latin America, as well as bringing material into the States and other places from Latin America. I know China has played a role in all that on both sides. But what's the current update with Latin America, Javi?
Well, things seem to be picking up overall. You have those kind of buyers that they are okay having safety stock, but they don't want to get stuck with those high prices when the stuff turns around. But I don't think it's going to turn around in the near future. So I have some conversations last week and this week with a lot of buyers that saying, like, should I put stuff in the water or no? I was like, my best guess is yes, due to the fact that Propylene, everything is moving. The trend is going up. It doesn't seem we don't see the light at the end of the tunnel when it's going to turn. Eventually, it's going to turn, but it's not looking like in the next few months. So we're having those discussions, and it has been very, very, very some tough conversations sometimes. People don't want to hear what you have to say, or when you show up with the increase of X amount. So it has been good, but overall people are taking more inventories. Latin America for history it has been used to import stuff, so they're used to lead times that now they're longer. They understand that, so it should be okay. And then the industries, most of the industries are running well. Some in Mexico is called red stoplight. So a lot of the industries are running 50%. The ones that are not considered essential. Brazil, similar way, running at a lower rate, but the demand is up overall across the board. So you have companies running at 50%, but they have orders to fulfill. So things are picking up. We're picking up also new supply partners in Latin America. A lot of people are looking away from China, and we're looking on the sides of the world. And Latin America has a great lead time. You'll be here in the States less than 20 days, sometimes 7 days, from Colombia to Houston, or from Brazil to Chicago, or to New York. So it's been really good. And that's all I have.
Yeah, that was maybe my next thought is the main reason people are looking to Latin America from places like China or other regions. So I guess it's a combination of both. I mean, being competitive price, number one, and then two, maybe the shorter lead times making it look more attractive.
Yeah, the shorter lead times, same time zone, or pretty much very close to same time zone. You have like plus three with Brazil. But yeah, so it's been, they're very more competitive, and the plans are kept well, and they're more technology in the upcoming in the last few years.
And one of the things we've been talking a lot about lately is the demand in the local markets there. So even though we want product from certain locations and certain producers in Latin America, they're seeing very strong demand there. So it's like not only is the rest of the world, Latin America is seeing improved demand, and with the coronavirus, with the pandemic, a lot of dependence is now on local producers. So there's less available from there too, as they try to satisfy local demand first.
Yeah, that's another good point.
Yeah, and all that brings us to kind of our typical next section on these, which would be price updates, trends. I know it's been a pretty price heavy discussion here so far, which obviously is the biggest thing, I think, playing a lot of factors into the industry. But I think it's safe to say our outlook for price updates across the board coming into February and looking ahead maybe to March is things will be moving up, I think is the best way to summarize it.
Yeah, I think Robb said it a few times earlier, place orders now. Don't wait till the end of the month, place them now, because the end of the month, everyone's going to be trying to do the same thing, and trucking's going to be even worse then. So place orders now.
That's a good point. I mean, I just looked, WTI is $57 a barrel. Now that's a 10% increase over where our last podcast was. So, people are going to be driving more, flying more, as the pandemic wanes, when and if it wanes. It's already starting to wane in certain areas. So we are already getting a forecast for oil to go up, much higher than where it is now, which will also affect all these, these crack products that come off of oil, and then eventually have another impact on the chemical products that we sell. So, also, you've got a strengthening dollar, but the euro to dollar is at $1.19 right now. That's interesting, that the dollar's been strengthening with all this new PPP and stimulus. PPP and stimulus is a very important topic, because the PPP round 2 just came out. We're seeing very quickly companies getting PPP round 2. If you've had demand destruction, 25, 30% during the early days of the pandemic, the first few months, you've got the round 2 coming. This is going to really start pumping out some more demand. And also the stimulus. We're looking at the Democrats. They're going to push through a 1.9 trillion stimulus. Again, this is going to really pump demand. So, we're not laughing at this podcast because this is no fucking joke. Like what's going on right now. You can bleep that, George. But anyway, what's going on right now is no joke. So it's really setting up for much higher prices. So inflation is what I'm seeing. So it really is if you talk about any different segment of our industry, there's concern. That's the bottom line. So and AJ makes a great point. We had price increases the last couple months on almost all the products across the board. People tried to get product into their tanks, into their warehouses ahead of time. They waited to the last minute. They didn't get it. The prices aren't going to be waiting for the third, fourth, fifth day of the next month to go up. They're going up on that first day. So order now.
This is a PG-18 podcast, so I think the swear is okay. But no, all good points. Price updates are moving up. Strongly recommend whether you follow our podcasts and newsletters or whatever the industry publications you follow. Keep an eye on things like propylene, ethylene, logistics trends. It's going to be a sign of what's to come in future months. Will definitely prevent being surprised by those price update letters on the first of the month. Better to stay ahead of it and just understand what's coming. Seasonal products, featured products for TCC. I know we're right in we're starting to get to the peak seasonal demand for things like Dicey and urea, AJ. Two things that hopefully would have orders on the books already, if those are big ones for you.
Yeah. If you don't have your Dicey orders on the books by now, you're probably going to miss the spring planting season. Urea's strengthening, in pricing and demand, obviously with all that's happening. The price of corn is the main driver on the price of urea right now. The price of corn is really high, so people, farmers will, spend more on fertilizer to maximize their crop, and that increases urea demand, which is kind of a funny, a funny tie together when you're talking industrial grade markets. But the price of corn is the main driver for urea at the moment.
That's good to know. I didn't really know that. I was trying to figure out where you're going to go from corn to urea, but that makes sense. If corn prices are high, people are going to want more urea, more crops. That's interesting.
Yeah, I mean, by far the largest demand segment for urea is fertilizer, and that's the driver for the price.
Yeah, we're also going into the spring season, the demand season for plasticizers. And obviously, we mentioned before propylene. Propylene goes directly into the oxo alcohols. You're going to see much higher prices on plasticizers. Some of the movements that we've seen lately are people are looking for alternate plasticizers because the price of certain plasticizers have gone so high. One that has gotten a lot of attention recently is our Evonik Elator CH. This is it's equivalent to the BASF DINCH diisononyl cyclohexanoate. This is a non-phthalate plasticizer, and things like acetyl citrate and different plasticizers that people are using that are non-phthalate or phthalate free have risen so much in price. There's been a new attention to things like Elator CH, which gives good performance in certain plastisol applications. And so we've seen like a lot of pivoting going on right now. Of course, with propylene moving up so much, 2EH will be impacted. DOTP will certainly be impacted. So people are now looking, at DINP again, where they were using DOTP. DINP, a much better performing plasticizer, by the way. And it's unfortunately a phthalate, and there's the labeling requirement for Prop 65, but that's the only requirement. Otherwise, it's considered probably the best general purpose plasticizer available, and now the lowest cost because it's lower priced than DOTP, more available than DOTP. So these are some of the products that people are pivoting to. Hey, we'll label the product to go to California so long as we can get supply. So it's not about price. It's not about, it is about price, but it's also about availability, and availability is critical right now. And so I think even though we're going into our seasonal products, it's what's available right now. And so that's a good example of what's available right now versus, a much higher priced product that's actually worse performing. So, but yeah, that's some of the things we wanted to highlight. The seasonal products, and we're starting to see some wane in things like glycols and methanols as we move into the spring season. But the agricultural products pick up, the coatings products picked up. You're seeing extreme tightness in monopenerythritol, neopenoglycol, all these different intermediates that go into coatings. Watch out, it's coming. It's going to get worse. So that's about all I got, Benny.
Yeah, you make a good point there too with the Prop 65 labeling and things like that. The fact that if you use DINP, it just needs to be a label on Prop 65 products. I think it's something that's come up a lot the last couple of weeks. We've been doing some virtual conferences and listening to some regulatory sessions, and there's great organizations out there. I know we do a lot with the plastics organization, the regulatory assistant organization based in DC, who obviously lobbies for the plastics industry as a whole. They have some great resources for what that means, what the Prop 65 labeling mean. They lobby on behalf of, plasticizer producers and things like that. So there are great resources out there. Prop 65 and labeling and all that doesn't need to be this daunting thing. There's industry partners that are there and ready to help you. Obviously, us as a company, we're obviously happy to give our 2 cents and try to point you in the right direction. But there's some great organizations out there to help if there's questions.
Yeah, we mentioned earlier that propylene prices are going up by 40-some%. What's that going to affect? Polypropylene, one of the lowest cost, most available plastics out there, polypropylene. So what does that mean? You've got high demand in PPE, you've got high demand picking up in automotive and other sectors. There's going to be a shift, maybe to flexible PVC or maybe to other polymers. Just like we're seeing in chemistry, you're seeing people shift where they can't get product or product has gotten too astronomically high in cost, they're shifting. So I think things are looking good for flexible PVC right now. Not only is this a high demand season, but some of those low cost competitive products are much higher cost all of a sudden. So, I think there's a good future, and thanks for that input. There are resources out there to keep you protected from those, awful lawyers in California. They're do the proper labeling, take the time, label. If it were me, I'd just label anyway, just to cut CYA. Just label anyway, even if I'm using something like DOTP or DPHP or something that's not Prop 65 listed, I'd still label anyway, just to cover. Everything's labeled in California now anyway. It doesn't affect any sales. It doesn't affect anybody's emotional buying. Just label it. People need the products, which they do nowadays. They're going to buy it anyhow.
Absolutely. Speaking of some of those resources and companies that are out there to help with things like that, obviously there's some great trade shows that always seem to have some regulatory sections and sessions in there. Obviously, seems like more and more of a talking point. It's something that's affecting business overall. We just recently had the Plastics Virtual Binder Compounders Conference that TCC was a sponsor of. A couple coming up. The Chemicals America show in Fort Worth in April is still scheduled. It was supposed to be in February, so it's still scheduled at that later date. We're optimistic we can be there. I know it's me and AJ, one of our favorite shows to be at. So we're hopeful that one's going to go on. Obviously, AFPM coming up in May, and then the in-person Plastics Compounders Conference in July. So some things on the books scheduled. I think reasonably considered TBD at this point, but we're keeping an eye on and optimistic to be able to get back to trade shows and events sometime soon. I know it's a big part of our business, and we're looking forward to getting back out there and meeting with everybody. But I think other than that kind of wraps things up. A couple recent podcasts. We've had Robert Fry, our economist, on that episode is live. We are looking forward to talking to the chief economist of one of the big industry publications coming up at the end of this month. But other than that, TCC continues to work from home. Things have been, I think, running pretty smooth. Business is good. Operations are running pretty smooth. Anything else to wrap things up here?
I think that's about it, Benny, and I got to fly, so.
Bye now.
Thanks, everybody.
Thank you for listening.
Appreciate y'all.